Are you worried about the next market crash? You should be. The truth is, market downturns are an inevitable part of the economic cycle. But what if you could protect your hard-earned money and even thrive during a recession? That's where recession-proof investments come in. In this video, we're diving deep into the world of recession-proof investing. We'll explore the strategies that can help you weather any economic storm and come out stronger on the other side. I'm talking about investments that have historically held their value or even appreciated when the rest of the market takes a nosedive. We'll be covering everything from the basics to advanced strategies so you can make informed decisions about your financial future, whether you're a seasoned investor or just starting. This video is for you. So buckle up, hit that subscribe button, and let's get started. So, what exactly are recession-proof investments? In simple terms, they're assets that tend to hold their value or even increase in value during periods of economic decline. Think of them as the all-weather tires of your investment portfolio. Now you might be thinking, nothing is truly recession-proof. And you'd be right, every investment carries some degree of risk. But the goal here is to minimize that risk by diversifying your portfolio with assets that have historically weathered economic storms better than others. Let's look at some historical data to illustrate this point. During the 2008 financial crisis, the S&P 500, which tracks the performance of 500 large companies, plummeted by nearly 37%. That's a significant hit to anyone's portfolio. However, certain assets, like gold, actually increased in value during that same period. Gold, often seen as a safe haven asset, rose by over 25%. This isn't just a one-off event either. We've seen similar patterns in past recessions. For example, during the recession of the early 2000s, also known as the dot-com bubble burst, consumer staples, like those produced by companies like Procter & Gamble or Coca-Cola, remained relatively stable. People still need to brush their teeth and drink soda, even during a recession, right? The key takeaway here is that while no investment is entirely immune to economic downturns, certain assets have historically demonstrated resilience and even growth potential during challenging times. And that's precisely what we're aiming for. Building a portfolio that can withstand the ups and downs of the market and keep your financial goals on track. Let's dive into the specifics. What are some recession-proof champions for your portfolio? First, we have bonds. Bonds. They're so boring. But US Treasury bonds are among the safest investments. They're backed by the US government. Buying a bond means lending money to the government or a corporation. Bonds offer stability and a predictable income stream. Next, let's talk about real estate. Owning real estate provides security. Rental properties can be a stable income source. Consider real estate, investment trusts, or REITs. Commodities like gold and silver shine during downturns. Gold acts as a safe haven asset. Investors flock to gold when the economy falters. A small allocation in gold can hedge against instability. Lastly, consider dividend stocks. These companies pay dividends even in tough times. Think of established blue-chip companies. Their consistent dividends provide steady income. What the experts say. Now, you don't just have to take my word for it. Let's hear what the experts have to say about the importance of recession-proofing your portfolio. Renowned investor Warren Buffett, often referred to as the Oracle of Omaha, famously said, "Be fearful when others are greedy, and greedy when others are fearful." This quote perfectly embodies the essence of recession-proof investing. When the market is euphoric, it's easy to get caught up in the hype and make impulsive decisions. But when everyone else is panicking, that's when opportunities arise for savvy investors to buy undervalued assets. Ray Dalio, founder of the world's largest hedge fund, Bridgewater Associates, is a strong advocate for diversification, especially during times of economic uncertainty. He suggests allocating a portion of your portfolio to assets that are negatively correlated with the stock market, such as gold or long-term government bonds. Even economists, who often have differing views on the market, generally agree on the importance of having a well-diversified portfolio. Nobel laureate economist Robert Shiller, known for his work on behavioral finance, emphasizes the importance of understanding market cycles and not getting caught up in short-term fluctuations. The consensus among financial experts is clear. Building a resilient portfolio that can withstand economic downturns is crucial for long-term financial success. While past performance is not indicative of future results, understanding how different asset classes have performed during previous recessions can provide valuable insights for navigating future market turbulence. Recession-proofing in action. We've covered the what and why of recession-proof investing. Now, let's talk about the how. Assess your financial situation and risk tolerance. How much can you afford to invest? What is your investment timeline? Are you investing for the long term or need access to funds soon? Understand your financial goals and risk appetite. Explore different investment options. Diversification is key. Don't put all your eggs in one basket. Spread investments across bonds, real estate, commodities, and stocks. If you're new, don't feel overwhelmed. Resources are available. Consult a financial advisor or explore robo-advisors. Risk management is crucial. Have a plan for market downturns. Building a recession-proof portfolio is ongoing. Regularly review and rebalance. Now it's your turn. So there you have it. We've covered the ins and outs of recession-proof investing, explored different asset classes, and discussed actionable steps you can take to protect your wealth. Remember, economic downturns are a natural part of the financial cycle. They're not something to fear, but rather an opportunity to position yourself for long-term success. What are your go-to recession-proof investments? Share your thoughts and experiences in the comments below. Have you ever lived through a recession and managed to not only preserve but grow your wealth? Let me know what strategies worked best for you. And as always, if you found this video helpful, please give it a thumbs up and subscribe to the channel for more videos on personal finance, investing, and building wealth. Until next time.